All right, what's up? So the week just came to an end and I had a loss on Euro NZD. At the beginning of the week, I had a loss on Monday and I ended off the week with a huge 17K win on GBP CAD. So I'm going to show you guys how, even though I just had kind of like the worst streak of losses that I've had in a while, it's been about 7 or 8 weeks since I've lost 2 trades in a row. This week, I did lose on Monday and then I lost again now on Euro NZD. But looking back, I had this one win that made it all back. So let me go ahead and show you the results here. Then we're going to get into both of these trades and what I could have done to possibly avoid these losses, but also what I did right. All right, so that was a haircut appointment. But as you see right there, those are the results. So ended up still up about 4.5K, even with the 2 biggest losses. Why? Well, that's due to the risk to reward. So as you see, my risk to reward on this right here was a 2.48. I'm always looking for at least a 1 to 2.4 because if not, it just doesn't make sense to trade it. But let's start off with the loss. Let's see if there's something here that you guys can learn from it so this doesn't happen to you. So first of all, Euro NZD, this was a market that was moving to the upside very, very consistently for a long time. It's important that we start with what was happening before because that's how we start to tell the story of what the market was doing. So you always want to try to craft like a narrative about what's going on, right? Because if we can do that, it explains everything so much better. The market is going bullish. So if it's going to continue to keep going bullish, it has to keep forming higher lows and higher highs. As you see right here, this right here is a higher high. But then when the market comes down, instead of forming a higher low, it actually forms a lower low. So if you look at the previous one, this current low right here on Tuesday, which was formed, was lower. So that's the first sign that the market is either going to start consolidating or it's going to turn into a bearish market. From there, we form a lower high. You have that first lower low, and then you have another lower low, another lower high. At that point, the market is bearish, and especially when it starts to use the EMA as resistance, at this point right here, it's safe to say that the market is going to continue to go down. So what do? I'm looking for sells. I'm looking for sell positions. The first thing that must happen for me to take a sell position is we need to break this strong area of support at around 2.01. So 2.01 is a nice round psychological level, which also means it's going to be a price area at which there is going to be a lot of buyers or potential sellers if the price manages to break below there. So what occurs? Once price finally is able to break below this support area, I'm watching it come back. I'm already biased that I want to take sells no matter what. But this is where I made my first mistake, which was entering in a little bit too early. I didn't have as many confirmations as I would have liked in order to take this sell position. So let's go ahead and go onto the 1 hour time frame, which is my entry time frame. Let's see, where was it? Right here, when the market pulled back the first time, it had a nice reaction. Then it pulled back the second time. I saw these wicks and then I took the sell because the market was obviously starting to reject a little bit. The thing is that it wasn't that strong of a rejection, and I should have noticed this, especially because the market already rejected it the first time and then it came back up into that same area. So that should have been a hint for me, like, don't take the sell because the market already bounced off of it the first time. If it bounces off of it the first time and then goes back into it, it's less powerful than if it would have done it on the first rejection. Second thing is that I should have checked Forex Factory because this was Euro NZD and I didn't have the filters set for New Zealand high impact news. I didn't see that a New Zealand news was going to come out. So I knew that for the euro, there was no news. For the US dollar, which affects every currency pair, there was not going to be any news events. But I didn't notice that there was a major economic event happening for the New Zealand currency. And when that came out during the Asian session, there was a single candle that stopped out the entire trade. So I do think if it wouldn't have been for that, I would have had a much higher chance of winning this trade. But I think that messed up the probabilities completely. And from there, I mean, as you see, it just went straight into stop loss. Now, what I did right on this trade was the risk management. I had my stop loss set and I only lost the amount of money that I was looking to lose. Let me show you the results one more time. So we take a look at the risk management because this is the important part. This is where the money's made. So let's take a look. All right. So as you see right here, we lost, how many pips is that? About 50 to 54, if I'm counting correctly. And the loss itself was about 7K. So I'm risking 7K to potentially make 2.4 times 7, which is around 18K. So, 17 to 18K potential profit. I do think this would have been a 50-50 trade at least, just due to the fact that there was some bad confirmations there that I entered in off of. Some other trades could be 60% win rate, like this one. But even if it's 50-50, we still make money on these trades. So I'm not going to sit here and say, oh, I did something wrong. I should change the way that I'm trading. That's what most people think, but that's wrong. I understand that we're doing things right. So, upon this trade, what did I learn? One is always check all the fundamental news that are coming out for any one of the currency pairs. So if you're trading the euro against the Canadian dollar, then you have to check both. But of course, the number one thing is sticking to the plan and just moving on to the next trade. Because if I would have let that trade affect me to the point where I wouldn't have looked for more trades this week, then I wouldn't have actually made back the profits that I did. But what I did was I kept on going, right? I kept looking for my strategy. I wasn't going to force anything, but I did want to make back the profit. So I ended up finding this sell position on GBP CAD. Once again, let's start by crafting the narrative. Let's see what's actually happening here. This is a market where if we go on the daily time frame, we should see some bullishness. So right now we're focused on this area here to the left between the end of September and the start of October. As you see, the market was going bullish. And at one point we do reach the top side where the market completely slowed down and was not able to go higher. So let's go down into the 4-hour time frame. We'll see that the market was forming higher lows and higher highs, respecting this moving average as a dynamic form of support. So it's a support area that keeps moving upwards and the market is consistently holding it and going higher and higher. As long as that is the case, that is a bullish market. However, something obviously changes right around here. That's when the market is able to break below this moving average and form a lower low. So this is the first official lower low in what was a bullish trend. It was a bullish trend, but we formed the first lower low. And at that point, we start having lower highs. And I noticed this and I'm saying, okay, I want to take a sell. But let's be smart about this. Where do I have to take a sell for this to be the highest probability trade? First of all, we have to be trading below the moving average. We cannot be trading above the moving average and then sell because that's contrary to the trend. So that's the first thing that I established. We got to break below. Second thing, I want to see a break below an area of support. In this case, 187,500 was a nice area of support because it's a psychological area once again. I was also looking at 1.87 down here to see if we could get a break below there. Because when the market initially came into 187, look at the big reaction that it had. It had this big reaction right at 187, which shows and it confirms my idea that the market is holding these psychological levels. So if I want to take a sell, ideally we break below it. So my sell position, it's interesting because I took it above 187, but I took it because of all of these rejections. So let's go down into the 1-hour time frame and let's look into the details about why I entered in exactly where I did. Specifically the entry confirmations. The first entry confirmation that I had out of 2 was this right here. So this candle, it was almost an engulfing bearish candle. I say almost engulfing because it wasn't larger than the previous bullish candle, but almost big. But it had a pretty big wick to the top side, which shows the market tried to go higher and it rejected it. Let me remove some things from the chart so you can see this very clearly. So as you see right there, you have that first confirmation. Second thing is obviously this candle that I entered in off of because it tried to go up, but then it rejected. So if it's rejecting and price is trading below this moving average, and we've shifted the market structure from our analysis earlier on, as you see from our analysis here, we shifted from a bullish trend, which is a clearly obvious bullish trend. And I want to do something here for a second. If I switch over to the line chart, tell me how obvious it is about where this market's going. It's very obvious that we're going higher. Just like when the market all of a sudden stops going higher and starts to consolidate, this is also very obvious, especially on the line chart, because it's just so objective the way that it shows what's happened. So then when it starts to go down, the highs get lower, the lows get lower, it's safe to say that the market has shifted into a bearish trend. It's really, really that simple. And then you do that, and then you start to find it very, very simple to take a trade like this. Because at this point, all you need is for the market to pull back, and the higher it pulls back, the better your entry is. You have to kind of time your entries where it makes sense. That's why sometimes I like pulling out the Fibonacci. Right here on the Fibonacci, the market pulled back all the way to the 61% retracement. Anything between 50 and 70% is a good retracement. So this huge move down that happened, you don't want to enter in down here. If you enter in down here, you get stopped out. You want to enter in on the highest point of the pullback while still being in a trend. If it pulls back all the way up here, then it's not trending anymore, and it's likely to either consolidate or to start going bullish. So it needs to go as high as possible while still respecting the bearish market structure or whatever direction it is that you're trading. That's the idea you want to use for these trades. And this is something that a lot of people get wrong. If you're correct about the direction, but you enter in at the wrong point down here, you're going to get stopped out when the market pulls back, and then it's going to continue, and you're going to get frustrated because you were right on the direction but wrong about the timing. Super, super important. So at that point, I entered in, had some drawdown on this trade, but it rejected the moving average. So that's something else you have in your toolbox, right? So like if you're in drawdown, but it's still rejecting the moving average, it's still holding resistance, you can stay confident. You don't lose confidence until the market literally starts to trade above resistance and above the moving average. Once it does that, you can close out of your trade early and actually minimize your loss. But until it's respecting the moving average and the resistance, you can stay in that trade because it's still a valid setup. So in this case, the market did take a while to play out, over a day, but the trade ended up playing out perfectly. My take profit got hit, and my full take profit initially should have been down here, which also would have gotten hit. But I just didn't want to play it too risky because this was a big losing week for me until this point. So I just wanted to secure my profit at the 2.48 risk to reward, and I didn't really care. Once again, I risked 7K to make 17K. I already showed you in the beginning. So that's the idea behind kind of like what I'm using right now in my trading. And it was a really crazy week. You know, I hadn't taken 3 trades in a week in a while, and I also hadn't lost 2 trades in a row in a very long time. But I think I'm just starting to get more confident on what I'm doing, and I'm going to continue to do this and scale up higher and higher. So yeah, if you guys want to see more videos like this, let me know in the comments below, and I'll keep making them. You know, I want to do some type of live trading thing, but I just can't, you know, figure out the logistics of it, considering these trades take a very long time to play out. This one in specific, I think it took around 48 hours to play out, from Wednesday all the way to Friday. So realistically, I can't record that whole process. So I'll probably just have to get clips. In this case, I wasn't able to record the ins and outs of these trades because I was just so focused on making sure, you know, I was making the right choices. So I will see you in the next video, and I appreciate you for your time and for watching it.